Hello and welcome to the Pro Forma Model's single-tenant real estate investment model walkthrough. The Readme tab states the model purpose, highlights common use cases, and provides an overview of functionality, formatting, and all of the unique modules within the model. This tab also provides additional documentation, contact information, and a summary of additional products and services available from Pro Forma Models to support your analysis needs. The Assumptions tab contains the model inputs that you can customize to your specific use case. Starting at the top left, general property information is input first. The investment structure and fees are input next. The investment structure assumptions include the hold period, closing costs on acquisition and disposition, target yield to investors, and annual investment general and administrative expenses. The model is pre-built for a variety of investment fee structures including acquisition fees, investment management fees, construction management fees, guarantor fees, and disposition fees. The model is pre-built with a two-tier waterfall model plus the return of capital and a preferred return. This section also includes the important assumption for spread on exit cap rate to generate the investment disposition value. The sources and uses for the investment are outlined next. Most items automatically calculate for the uses and all sources automatically calculate. Uses inputs include the purchase price, upfront capital expenses, due diligence costs, and working capital. Equity assumptions are input next including the pro rata share of general partner and limited partner equity. The model has a highly dynamic debt schedule allowing for a variety of user customizations. Debt assumptions include loan-to-value, the ability to add upfront capital expenses to the loan, and the ability to model amortizing and interest-only loans utilizing fixed or floating rate debt. The model has the ability to model an interest-only period within an amortizing loan as well as the ability to utilize monthly and annual prepayments if desired. The starting tenant and lease details originates the model revenue with inputs for tenant information, the lease term, the in-place rental rate, and the rent increase frequency. The next section is for lease turnover assumptions when the upfront lease expires. The model has two renewal situations, which can be viewed as the first situation being the current tenant renewing and the second situation being the upfront tenant turning over and a new lease needing to be executed. Assumptions include the probability of renewal and turnover, the term of the lease, the month of rent increase, and the annual rent increase. The final assumptions section is for the operating and capital expenses. Inputs are included for other income, vacancy and collections loss, and total operating expenses. The model has the ability to apply expense recoveries to create a net lease financial model. Annual capital expenses are input in this section and can also have a recovery percentage applied to it for tenant improvement recoveries. The Pro Forma tab contains the rent revenue model, Pro Forma financial statement, and tracking of the annual fee basis. The top of the Pro Forma tab calculates the rent projection for the in-place lease as well as both renewal situations to come up with a blended annual rent figure. The Pro Forma financial statement works from revenue to effective revenue before deducting expenses to calculate the net operating income. Next, the capital expenditures, investment management fees, construction management fees, and investment general and administrative expenses are deducted to determine the annual cash flow from operations. Following the deductions for debt service, the net cash flow to equity is calculated. The Debt Schedule tab is completely dynamic and starts with a summary of the mortgage assumptions in the loan details section. The debt schedule is organized to break out each component, such as principal, interest, and prepayments so a user can see all components of their total payment. The model has the ability to reflect an interest-only period within an amortizing loan and also has the ability to utilize floating rate debt. The loan summary section highlights the impact of prepayments, The Data Validation tab contains all controlled lists within the model and can be customized to your specific use. The Output tab contains the high-level decision-making reporting output in an executive summary format. The report begins with the sources and uses presented in data table and visualized with pie charts. The uses shows how capital will be allocated on closing for the investment, while the sources shows where the capital will come from. The next section showcases the annual valuation basis and capital account balances. The valuation basis tracks the asset value from a cost, gross value, and net value perspective. The capital account tracking monitors original, contributed equity, cumulative principal, and the debt outstanding balance. Visualizations of the valuation basis debt outstanding balance are provided in addition to the data table. The investment cash flow is then presented highlighting the net operating income, funds from operations, adjusted funds from operations, and free cash flow to equity. A line chart is provided visualizing the cash flow trend of key operating financial metrics. A summary of key performance indicators on an annual basis are summarized as a data table. The key performance indicators include the targeted annual yield, growth metrics, such as net operating income growth, operating margins, such as the funds from operations margin, and key payout ratios, such as the adjusted funds from operations payout ratio. Now that the operating figures have been presented, the report dives into returns. The first return section highlights the gross unlevered internal rate of return, yield, and multiple of capital. The gross levered internal rate of return, yield, and multiple of capital are presented next. The partnership level returns are presented next. The partnership level returns are the equivalent of the net levered cash flow less performance fees generated from the waterfall, which we will review next, and divided pro rata to the general partner and limited partners. The internal rate of return, yield, and multiple of capital are presented for the general partner and limited partner. The waterfall model begins with the gross levered net cash flow. The investment management fees, construction management fees, and disposition fees are deducted to arrive at a net distributable cash flow. A 100% return of capital is provided to the limited partners. This means the limited partners receive a 0% internal rate of return as they are receiving their capital back. The preferred return is then provided to the limited partners. In the model walkthrough case study, an 8% preferred return is utilized, but this can be adjusted to any rate applicable to your use case. The waterfall model is now into the promote section of the returns. The waterfall model is pre-built with a two-tier promote structure. The model walkthrough case study is utilizing a first promote tier that results in the general partner earning 15% of returns between 8 and 10%. The second promote tier results in the general partner earning 25% of returns over 10%. Please remember that all return and promote metrics are fully customizable to your specific use case and are not constrained to what is presented in the model walkthrough case study. Thank you for tuning in. We hope you enjoyed this Pro Forma Models walkthrough and encourage you to visit our website to try the model for yourself.